Howdy, welcome back to Dion Talk. In today's video, we're going to do something a bit different. There's going to be two of us talking. I have Michael Zuber here from One Rental at a Time. You guys have seen, I've been on his podcast and I recommended his book in my BiggerPockets episode 448, which is still available on YouTube. But I reached out to Mike to do and I let him know I was going to be doing a review of his book because his book really resonated with me. I found it right about 2018 when it came out, and I had just reached financial freedom. And I really wish I had found this book 2 or 3 years earlier because I was able to do it on myself, but it would have went a lot smoother and a lot easier if I had the roadmap that was spelt out in this book. So I really appreciate you coming on, Mike. And it was really cool that you gave away the signed copy of your book when I did the giveaway of the Audible version. The person who won it actually was really excited, came back to me in a message, said, never usually the winner of these kind of things. So it's going to mean a lot. Since that review, I've had several people send me pictures, and I'm a guy at work holding up the book saying it just came. Nice. And he was super excited.
Very cool. Well, thank you for the opportunity. I wrote that book because, like you, there was no roadmap for full-time employees who maybe were inspired by Rich Dad, Poor Dad, the mental shift. There wasn't a roadmap. And I have a bookshelf, right behind that book cover, maybe 200 books, maybe 250. None of them was, hey, I'm a full-time employee. I got into real estate kind of as my side hustle, right? We didn't have side hustles when we started, but that's what they're called now. How did it work out? And oh, by the way, we've been doing this 20 years. So I know what the last crisis was. I know what it felt like to have multiple offers. I knew what it was like to have bidding wars. I know what it was like to have affordability index drop to a point where I had to stop buying, right? So we've seen a lot in 20 years, and a lot of the YouTube entertainers, as I like to call them, they've been around 5 minutes and all they've seen is upside. And, they're giving out some pretty dangerous advice, in my opinion.
Well, one of the things that's really mattered to me is because I'm kind of one of those guys. I didn't start investing until 2010, 2011. And so I didn't see the last downturn. So I've actually really heavily been relying on your information that you put out. And an example of that is in 2020, I was making a huge mistake. I purchased a fourplex in January and I was house hacking and it went really well. But then prices started to climb. And my cheap mindset from 10 years ago said, I can't afford that. There's no way. And, I missed the whole Rich Dad, Poor Dad. How can I afford that? But in one of your daily updates, you talked about how interest rates going down compared to the price increase was actually on some scale keeping the cost, not the price, but the cost less for the consumer. So I opened up my mind, grabbed my CDS rental calculator app from Chandler David Smith and put in the numbers. And I thought, even with this next triplex costing me more, the payment is going to be less. The down payment is going to be about the same. And so because of your video in November, I picked up a triplex that's giving me about a 17% cash on cash return that I wouldn't have even looked for had I not seen that video that one day. So thanks for that.
Oh, that's awesome. I try to put out good stuff every day. Every day is original. I'm telling people what I'm doing. And when I see somebody talking crazy, like that video came from some idiot saying, look, 2020 prices, same as 2007. And I'm like, you are hurting people by telling them that message because that is beyond stupid. People don't buy houses like they buy shoes, right? You walk into Macy's or Nordstrom's or wherever, you buy your shoes all in. You don't finance them. We finance real estate. And I was buying back in 07, 08. My interest rate was 6.5% on an investment property. Today, it's 3.5%, 4%, 3 1/8. I have some people getting, even if the prices are the same, the payment is 20 to 30% below. And oh, by the way, rents are up 25, 30% from 07. So anybody giving you advice, looking at a chart going, look, price is same as price, is either an idiot or stupid, and I'll let them choose which one.
The thing that really resonates with me is the way you've grown a YouTube channel and the way that you've marketed a book that's helping people reach financial freedom. And for the average person working a full-time job is that you don't do clickbait. You haven't jumped on the bandwagon of, hey, housing crash is coming. Even I did a video on and I really kind of took your information and filtered it through into the way that I talk about how I don't expect a housing crash or even a correction throughout the rest of this year, maybe even far into next year, even without you jumping on the, hey, this is the current trend that causes a lot of fear to make people watch my video. You're still growing. You passed 15,000. You're about to hit 16,000 if you didn't today. I haven't checked. That's really cool because that's a lot of people actually getting real information instead of being tricked with a fancy looking thumbnail.
Again, I'm always full disclosure. So I put out a video in December about San Francisco, right? I've said constantly that I think San Francisco's in trouble. And I put out some numbers that were really like, I think it was like 28,000 people left San Francisco. For a city that's got 100,000 people, that's like meaningful numbers. So I titled the video like San Francisco crashing, not intending to go on the crash bandwagon, but I got addicted, right? I got like 40,000 views in like 3 days, which for my channel, when I put out 5 videos a day, that's a lot, right? So I'm like, huh, okay. And then I interviewed somebody from Vegas. So I tweaked that message a little bit to talking about is the crash coming. And again, I got like 35,000 views. So I did 4 crash related views in December. And I got to the end of the year, end of the month. I made $3,500 in YouTube revenue and I felt terrible. I had never felt dirtier or just negative, depressed. I'm like, I will never do that again. I'm not going to create content for an algorithm. I do not think the market we're going into is bad. If I did, I would talk about it, right? If that ever happened. But I think the market we're going into is far more likely to be the roaring 20s than a Great Depression, right? I don't think it'll be a decade long. I think the time will be collapsed. It'll be 4 or 5 years. But I think next month will be better than this month. I think the month after that will be better than next month. And I think we are certainly going to have a pretty good 2020. And I am not going to do that again. I was depressed and I'm like, God, why am I doing this to myself? I don't like that. I don't think that way. I'm generally positive. So
If I could, I don't know that you should feel bad because, and this is me filtering what I've learned from you. And then I've, followed up with other research, but there's almost 400 housing markets. So people talk
yeah,
about the housing market crashing or the housing market correction, but you're actually right with your videos. San Francisco was impacted by a pandemic where people didn't want to be around crowds. They could work from home being more of an option, and people could afford a $1,500 a month mortgage instead of a $4,000 a month apartment complex or
absolutely.
apartment. And so Las Vegas is a service industry. Actually, somebody educated me on the BiggerPockets rookie group the other day about how that was really impacted. So me saying I don't see a housing crash coming is kind of insulting to somebody who's in the pocket that
Yeah.
is being impacted. And you're right, San Francisco rents, and it was all the people moving out. Was it Pinterest paying $89 million to break a
Yeah.
lease to just get out of there?
That should tell you
So,
something. They're spending $90 million to break a lease. That's a signal.
right. Yeah. So there's like the 12 major pockets of those markets are going to see those corrections. So that says how nuanced it is for the
Yeah.
people that, not like the way you did it, where you took a market and said, here's what's actually happening. There are people just saying, the sky is falling. You better, watch all of these videos.
Yeah, I appreciate that. And you're right. I was very clear. I generally don't like talking about negativity. So yes, I think the San Francisco video was awesome. I would probably do that again. It was different. It was hard hitting, was factual. But I did go, oh wow, look, I'll do another one and I'll do another one. I don't think I would do those again. But yeah, I've actually gone to the point, all these people talking about a 20% market crash, and Ken McElroy, a freaking 6 months ago, said 40%. I'm like, Ken, I will bet you $10,000 that we
I
will see
remember that
price
episode.
appreciation next year. What charity you want to go to? He didn't reach out.
So I want to be respectful of your time, and I know that I'm in a lucky position to get to talk to somebody who's had the experience that you do, but I kind of want to do something different for the people listening today. I have some subjects that I want to talk about because I want to get your perspective, because I have an opinion on certain things and we get into our little box of how we see things. So I want to see if we could play a game of overrated, underrated
Awesome.
on some subjects. And let's start with the first one of, in order to invest in real estate, how important do you think it is to have a high paying job? Overrated or underrated?
Oh, I think it's vastly overrated. I think if you've ever, there's so many ways we can take this. If you've ever played Robert Kiyosaki's cash flow board game, you know firsthand that if you pull the lawyer or doctor card, you're going to lose, right? High incomes, yes, sure, you might be able to qualify, you might be able to put a little more paper aside, but you have likely made the mistake that I made in my 20s, where I allowed my consumption to increase to my income. So I had very little disposable income, AKA savings, at the end of the month. So what I tell folks, and I tell high school seniors this all the time, I ask them, can you live on $2,000 a month? And every high school senior I've asked says yes. Here's the reality. If you can live on $2,000 a month, even 2,500, you are so close to financial freedom. It's unbelievable. If you get a high paying job and your monthly nut now is 15, 18, 20 grand because of where you live or your fancy cars or your fancy lifestyles, you're a decade to 15 years away. So I think having a high paying job is overrated. I think it's a trap. I think it promises things. I think people tell themselves they deserve stuff when they don't. And it's really dangerous because if you get a high paying job and then you lose it, it's tough to come back from that. So I think a high paying job is overrated.
Okay, good. That was the reason I brought that up, is because I wanted to see what you thought, because I started from a position where I was making about $17 an hour. And at that point that's when I decided I need to find financial freedom, because even if I got a high paying job, and I think I really confused the owners of the truck driving school that I worked at, because as I took a leadership role and started being the manager of the company, I fought them on every raise. Every time they said, I want to give you a pay increase, I was like, no, nope. I want to stay where I'm at, because yeah, we're having a good year and I'm growing the company. And I had an idea it's doubling us in size in about a year. But if we have a bad year, the high paid person is going to be the first one to go.
You're right. I was a first and second line leader the last 10 years or so. What's really important to that is I remember 2 recessions, and I remember being one of those people in a boardroom and we were looking at Excel spreadsheets, and 9 times out of 10, the highest paid person got whacked. It was some of the worst days of my life was going, oh my God, I got to lay off 18 friends or whatever it was. So yeah, you're
Ouch.
right.
The second thing for over under would be interest rates. With them about to go up or to stay the same or to go down with the news that we're getting, do you think people are overreacting or underreacting?
I think they're underreacting for a couple of things. You've read my book. You know that the affordability index is that thing I look at monthly. Even me, right, doing this 20 years, I have been generally buying into an environment where rates have been going down. I think it's far closer to rates reversing now and hitting bottom and coming back. That's going to impact affordability. That's going to impact demand, because some people will get no answers instead of yes answers. It could impact new construction. You know, you have to wait 6 months or 5 months, so you may get a pre-approval and then lose out. I do not think people are appreciating the psychology of 3 or 4 years of even slowly rising rates, because people are people. That's one thing. That's why my channel on the Daily Financial News, I talk about the consumer all the time, because if you learn what they do, they're creatures of habit. They change on, like, they're always blue, but they're just different colors of blue, right? They don't go from blue to pink or orange. And what happens with consumers and rates is if they go up, some people will act because they have to move, but many people will go, I missed it, I'll wait. And then they delay, and then they go up again. And I don't think people are appreciating, that I think rates are going higher. I don't think they're screaming higher, but the fact that we've come off the bottom and now we're going to have 3 or 4 years, right? I think rates are higher in December. I think they're higher in July. And then I think they're higher, the following December. And I think that will impact real estate. That'll impact affordability. Something to watch for sure.
Okay. So we were agreed on the first one. We're agreed on this one. I think people are not concerned enough with the rates and the timeline. When rates go up, the cost, again, of the property will go up because the payment won't be lower with the lower interest rate. But prices won't come down, because there's only one thing that makes prices come down, and that is time on the market. When a seller lists a property and it doesn't sell, or it doesn't get 30 offers in 2 hours like we're at right now, that's what will cause prices to go down. And that could take weeks, months. So even as the rates go up, the price drop is delayed.
In economic speak, and housing is very price inelastic, meaning it doesn't fall very quickly. It takes long time and lots of other events. It's not like stocks that you wake up, they're down 10%, up 10%. Prices are very inelastic. They don't fall very quickly.
Okay. And I think I have the first thing we might disagree on. Your phrase, and I use this a lot, I actually use this at my school when I'm managing people, is do the work. Every day when you take some action, instead of like taking a whole Saturday to do your real estate stuff, because you'll be burnt out by hour 3. So then you have 5 more hours of unproductive time. So is it overrated or underrated to look at the market every day?
I think it's underrated. I believe a lot of people think you can do real estate investing by just looking at Saturday or Sunday. I talk to them all the time. I know people that spend 6 or 7 hours every Saturday and Sunday combined looking at YouTube, reading BiggerPockets, looking at Realtor or Zillow or whatever. If you're still trying to find your lane, I mean, you don't know what you want to do, you don't know if you're buy and hold or flip or hold, that's all good. But once you declare what you are, like I'm buy and hold in Seattle or Portland or Fresno, that is actually wasteful. I believe you can do all the effective work in 2.5 hours a week, but it's 20 minutes a day. I think it is underrated. I go back to professional athletes. Do you think Kobe Bryant became one of the best basketball players because he only practiced on Saturday and Sunday? Do you think Steph Curry only shoots 3-pointers, or Damian Lillard only shoots on Saturdays and Sundays? No, they do it every day. Get muscle memory, get practice. Even doing it in a, because that's what I get a lot today from BiggerPockets newbies, is today's a horrible market. I can't find anything, so I'm going to sit on my hands. And I wrote 250 offers last year on MLS based deals, and I didn't get a one. I think I got like 5 counters. I didn't get anything, but I have the muscle memory. I know how to calculate what I think an appropriate yield is. And I wrote 250 good offers. I didn't get any, but I kept the muscle memory. I kept moving forward. Some people go, "Hey, no inventory. I'm just gonna point at it and whine and cry and do all those things." No, practice, because it will change. I've been doing this for 20 years, and I've been through crazy market changes. I've never seen a market like this, but it's already starting to change. Just since January, inventory is slowly creeping up. And I think if you do your work now, you could be ready in April or May, when I expect some move up buyers to list because they want to take their equity and go somewhere else. So I really think looking every day is underappreciated.
Okay, so I was wrong. We agree. I know that do the work was an everyday thing, and I thought that it would be, I thought we would have different opinions, but for me, it's to do it every day, because setting aside that big chunk of time and doing it once a week, or 2 days out of the month, makes it like you're scaling a wall, trying to climb over a whole thing. You're trying to buy a property in a day, find a deal, make an offer, learn the market, learn the neighborhood. Whereas if you're looking every day, you might not be looking at your deals from the MLS, but you can be looking at what's going on with interest rates. What is going on with my credit score? How is my savings rate looking? What is, so a little bit every day is really the only way it works for me, is to make a habit out of it, because you've hopefully heard me say a few times, I'm kind of lazy. And if it's not a habit, I won't do it.
Yeah.
And especially if I set aside a whole
totally
Saturday,
agree.
and if I miss that one day, then I've missed the whole week.
I've never, and I've been doing this a long time, I've never seen anybody be successful, what I call weekend warrior, whether it's dieting, exercising, or becoming a better real estate investor. There's a lot of stuff that happens Monday through Friday. And if you're only looking Saturday and Sunday, you're going to miss it.
David Green said it on BiggerPockets, that nobody wakes up with a six-pack and just says, wow, where'd that come from?
There you go.
They do some workout every day. So to get that financial six-pack, you have to be doing some of the work every day.
I totally agree.
And you mentioned just a minute ago about the change in inventory. So let's pick that as a subject. Is the lack of inventory overrated or underrated?
Oh, I believe it's underrated. The lack of inventory is beyond problematic. We could have really explosive growth. The affordable home is almost like the Loch Ness monster. You can get new home construction. You can go buy a $500,000 home, or you can buy something 150x the median, 150% X whatever median is in your market. Those exist. I grew up poor, man. My family could never have afforded a house above the median, right? So just to put numbers with this, everybody go look up the median in their market. My median happens to be 360 today. I like to play below 200. There used to be a time when there was hundreds of those available. Now, if I were to go look below 200, actually livable condition, it's probably 30. We are about to have a housing affordability challenge. That's going to be meaningful. I mean, that could really lead to this dreaded renter nation. I'm not calling for it, but you could certainly see the dominoes line up. Millennials leave Class A apartments, right? They absorb that entry-level homes. No more homes are being built. It could be a problem. Because when you say no inventory, there's still plenty of $1 million homes available, but it's that affordable home. You talk about it now, but like nobody sees them anymore. It's actually pretty frightening.
Two things. First, I agree with you again on this one. I think it's underrated. You mentioned it, that you can have a house built, because the typical solution when prices get too high or there's no inventory is that you can build. Well, with the pandemic, we're seeing lumber prices triple, and we're seeing contractors make a lot less houses because the profit margin is so much smaller without being able to push the price up. So I agree, lack of inventory is the problem, and a big dump of inventory or slowly gradual increasing inventory still has 6 months to a year before it has a real impact on the overall real estate market. So we're in, like you said, something that nobody's seen in 20 years, and it's changing already. Do you think that it is easier to learn as a new investor right now, if they're starting out right now, or if they started out in 2003 when it was pretty calm, and we had just recovered from the .com, and 2008 hadn't happened yet? Is it overrated to be learning in a hot market, or would you think it'd be better to be in a slow market?
Well, again, that's a great question because I kind of have two minds of it, right? If you happen to be in a situation where you have money, right? You have the down payment, it is obviously easier to invest in a calmer market where investors have a chance, which is very much '03, '04, not 2020, not 2021. Most of the people I interact with on my YouTube channel who are starting out, they may not have the down payment. It's actually easier to learn today. Because again, if you were like, I talk about it all the time. Let's just say it's listed for 200. You do the work. Your math says you can't, if you're going to get a 6% yield, you have to pay 185, right? Let's just use those numbers. Today, what happens is, first off, you should have confidence. You've done the work. You should feel good about writing 185. However, we all know today that 200 home is going to get bid up to 220, right? It's just going to happen. If you do that, I want to first of all applaud you for taking action. I do not want to celebrate only somebody closing on a deal. If you have never written an offer before and you've done the work and you go, you know what? I can afford 185 on that 200 home and it gives me my 6% yield. You have freaking crushed it. You are sitting on second base. You are ready when inventory changes. In reality, I don't think people are appreciating the power they have today. You can practice writing good offers today. And for most part, you're not going to get accepted, but you can still feel good that you took a step forward. So that's the important part, is learning what you can offer.
It's always the right time to buy a good deal.
Yes.
And I think it has always seemed like it's too expensive to buy real estate. In other words, somebody would have snatched up every single property, but somebody is investing successfully in every market, whether it's factoring in short-term rentals or a value add like putting in a bedroom where there was a den. In 2003, when the market was pretty calm, you had a lot of competition. Right now, you have a lot of people who are kind of scared. And some investors that are coming into real estate are doing it because the stock market is playing vertical pong, and they're not sure if that money is going to be safe.
Yeah.
And crypto is developing its own nation of confusion, but people understand real estate. So there are some people who are putting money in properties that are going to be your alligators. They're going to lose money every month, but they feel that the money's safer than it would be almost anywhere else. So I think in a hot market is a better time to learn.
Oh, it's absolutely a better time. I would agree with that. Yeah. Because let's just, the last thing I'll say comparing '03 with 2021. In '03, at least in Fresno, California, my competition was about 60-40, meaning 60% owner occupants. Because again, I was always playing in that about 80% of affordable, and about 40% other investors like me, buy and hold guys, right? Fresno was like the market in California in '03, '04. Now it's about 90% owner occupant and 10% investors, because most investors have given up. When I bid on stuff now in the MLS, I'm usually the only investor. And that is awesome, because most of the investors have run away, or they're telling themselves it's too much, or they've gone out of state. So when my market turns, I will be the only investor writing offers. I will write great offers, not good. And I will clean up for 6 months before anybody, turns around. It's going to be awesome.
That's one of the things that's really important about doing the work every day. There are people that say, when I make more, I'll start saving. Or when the market crashes, then I'll buy. But when the market's crashing, everybody will be more scared of prices dropping than putting money into the real estate at that point too.
Dude, I have a great example of that. So 2010, right? Again, 20 years of doing this. 2010, my market is the only time I saw motivated sellers. They were all capital letters. They were all banks selling. There wasn't a buyer out there. Every Monday, there'd be another 100 properties on the MLS. I would have 2 or 3 days to look through them, and I would pick up 2 or 3 every other week. No competition, none. And I would offer 80% of what was listed. And then the bank would, it was comical. They listed at 100, I'd offer 80. They'd counter at 90, I'd offer 85. Done. The bank didn't care. I'm just using those numbers. But yeah, everybody who says I'm going to wait for the crash, you're a fool, because you're going to be scared just like everybody else was last time. You're going to be sitting in the corner going, oh my God, oh my God, oh my God. And I'm just going to clean up.
One of the reasons why I recommended your book on BiggerPockets, and I've given away several Audible copies, and I actually did a video where we did the giveaway. Your strategy shifts based on what's going on in the market, and you only know what's going on in the market because you're doing something every day.
Exactly.
And it's kind of a law enforcement thing. In law enforcement, you look at all of the evidence and then you decide what to do or what happened. You don't make a decision and then try to find evidence to back it up. So there was a time where you got into multifamily, and there was a time where you got back into single family, and there's a time where you decided now you have the cash flow to get into flipping. It seems like a lot of new investors, or just investors in general, make a decision and then sit back and kind of wait until what they want to happen happens. The crash, the correction, the certain number that they want to see.
Yeah. Again, I can't stress enough, doing the work daily. Again, you can do it in 20 minutes. Give me 20 minutes, 7 days a week. Again, so I've been doing this 20 years, and I think I have missed 20 days in 20 years every day. I mean, it's a reflex at this point.
It becomes a habit,
Yep.
which kind of brings me to the question where it's funny. I'm trying to find something that we disagree on, but most of my knowledge has come from watching you every day for, a long time. But who do you think is in a better position? I know this is kind of a game of overrated, underrated,
Sure.
but someone who has 20 years of experience versus somebody who's starting out now or in the last year or two, who do you think is in a better position to
God, I hope the person who has 20 years experience is in a better position. You just see more, right? The beauty about real estate investing is it is cyclical. I like to say it has 12-year cycles and people have 10-year memories. So for example, 2020, March, if you were flipping, wholesaling, needed some kind of hard money to close a deal and you were in escrow, you were hosed. Hard money vanished for about 6 weeks. The whole lending, the alt lending environment froze up because first pandemic for everybody. We're going to hold our cash back. We don't know what's going on. So for 6 weeks, it was dried up. I'm like, nope, been here, done that. I know what happens when I've seen it before. We're all good. So we picked up a couple of deals right in that window from other, like, for example, the 3 houses on one lot we got was in contract at 225. We ended up picking it up at 175. It was worth 300 just because we had different ways of getting access to capital. So again, if you do the work for 20 years, then that's important, right? If you were just sitting on the sidelines and you bought a house and you weren't really watching, probably actually more dangerous than the new person. But someone like me who's been looking for 20 years and owns it when he makes a mistake, but also, like you said, doesn't argue with the market. That's a big thing for me is I don't argue with the market. The market's not looking for my approval or validation. It is what it is. So I'm going to react. And if I need to change, I'm going to change. Yeah. I mean, there was a time in 19 where bigger is better. Like Grant Cardone was screaming it and people were believing it. So I sold a bunch of C-class apartment buildings that needed hundreds of thousands of dollars in immediate investment. People paid class A cap rates for them, which if you don't know what that means, they overpaid. That's okay. If you want to overpay for something I own, I'll sell it to you every time.
I have a different opinion.
Perfect.
A 20-year investor like you who is on YouTube and educating people and paying attention to the systems and the processes with the shifting market, yes, better position. But I'm thinking that's like 2% of the actual investors with 20 years of experience. Most of them, a lot of them saw, I know how to invest before the housing crash. And then the price dipped so much that they bought a ton of properties on sale in 2010 and 11. And my brother's an example. He invests in mobile homes kind of in the middle of nowhere and then fixes them up because he's got really good craftsman skills. But for about 5 years, he's been terrified and he hasn't bought a property because prices are going up to where it doesn't make sense. Not thinking,
yeah, you're right.
The more I pay, a 10% or better cash on cash return is a bigger amount. I can't wait to spend another $1 million because that $100,000 a year is going to be great. People that are starting out now are watching. They're on YouTube. They're educating themselves. And this wasn't available 20 years ago. There are people going off of business models that just don't work, that don't know that YouTube University exists and that they can hone or redirect their investment strategies. But they're successful with what they did then. So people look to them for information, when I'm hoping that we can direct those people to people like you with the experience, the knowledge of how to shift your strategy, but are aware of how constant work every day and education every day is important.
Well, I think you're absolutely right. I think you're right. I mean, I know some 20-year investors who are like, hey, if it ever is 2010 again, call me. I'm like, really? You really think we're going to get back to 2010 in our lifetime? You think we're going to do that kind of stupid lending? I hope not. That was painful for people. But you can still, I mean, I've done a deal, at least 5 deals every year since 2010. It's because I do the work. I don't second guess. It's been great. Rents have gone up almost double. Some of my early rents from 2010, certainly 80%. Yeah. And rates are down 50%. So you're absolutely right. I think your point of view is very valid.
Oh, and what's great about real estate investing, if you have the tools to do this, is that you can also tailor it to the type of person that you are. And please don't take this wrong, but I think that you and I are kind of your average guy. We both had, we learned skills to do a trade, to develop income, and we got into real estate to get to that passive income or freedom number. But you have a drive to make it a business, and you're doing 5 deals a year, and you're doing the work every day. And well, I'm doing the work every day, but that's been a purchase every 2 years, which got me to financial freedom in less than 10 years. But it worked for me because I'm raising kids, single parent, working a full-time job. So far, I'm one of those lucky people who just loves the actual W-2 job that I have. If that ever went away, then I'd be, following you even more closely, trying to figure out how to get to those deals every year. And they mentioned this in the BiggerPockets episode of me. They talked about my focus, how it takes a lot of focus and my focus was really not letting life creep happen, not spending more money every time I added cash flow. But for you, it's taken focus to do those 5 deals every year. Do you think focus is overrated or underrated?
Oh, focus is very underrated. It's actually the number one thing I talk about in my course. It's the number one mistake people make. And again, I go back to how I started, right? And first off, no offense taken. I am the average Joe. I grew up with nothing. I have all of the kind of struggles growing up. I had to pay for my own college. I got married at 19. I'm not supposed to have a portfolio of real estate, but we did. We started. We cut our expenses and all those things. The only reason I was able to do that while working 70 hours a week, while being all over the globe, right? My job took me I could be in 3 countries, 3 continents in a week, right? I mean, just think about that. And we didn't have smartphones, right? There were Blackberries and stuff at the time, right? They didn't have the screens. So I actually had to plug into hotels and stuff to do this. The only reason I was able to get started is I got super focused. I knew I was buy and hold. So I ignored flipping. I ignored wholesaling. I ignored multifamily. I knew I was going to be within driving distance of my home. So for me, I ignored out of state. I found Fresno, good. City down. That's 1 million freaking people. I got to get hyper focused. So I found a zip code in middle Fresno called 93703, the Mayfair. I'm like, great. That's still too big. I need 3 or 4 bedroom homes, 2 baths, 2-car garage, 1 story between 12 and 1,500 square feet. I hit that one search for almost 3 years. That's all I looked at. Focus, focus, focus. So I knew that zip code, that size better than any real estate agent. And I could find or create good or great deals. That's just how it works. And then after you do it a while, then you expand. Then I went to the, Old Fig Garden, 93704. I went to the Tower District, 93728. You just expand. But dude, same search for 3 years. Focus is underappreciated. If you are going to be a buy and hold investor and you are trying to compare Cleveland, Ohio with Austin, Texas, and Huntsville, you're failing. You can't go 5 different places at one time. Hyper focus. That's why I said earlier on, you could do the work in 2.5 hours, 20 minutes a day. If you're picking 3 cities and 3 different means of doing real estate, just give up, especially if you have a full-time job. I mean, Jesus Christ, how are you going to go anywhere? So focus is greatly underappreciated. It's the number one thing I talk about. It and daily execution are like part A and part B of number one.
Yeah. And I think I've been listening to you recently. You're talking about the 10 traits of the millionaires that you've talked to, like over 100 that you've interviewed and talked to, and focus seems to be really key. And it wasn't clear to me really until conversations like this, especially with like David Green pointing out that focus seemed like a big thing, because I'm kind of scatterbrained. I think after Desert Storm, I've got some memory issues. I've got Post-it notes everywhere. My phone has reminders. I have people telling, I set up ways to where my memory can't be the problem, right? For me, focus is automation.
Same,
when people talk about paying yourself first, the government takes the taxes and they understand that to even pay ourselves first, it's easiest to put 401k out before you see your money because it's automated. So for me, it's setting up the auto searches, setting up a reminder that on this day, these 2 or 3 days of the week, these are the days I'm going to look at looking for deals. So for me, the focus is a system more than my ability to stay focused. And that's where it takes
let's be
making it a
clear.
habit.
Yeah, let's be clear. I had to, as soon as I could save the search, which I think was after like 6 months when they added that feature, I just hit the same search. I didn't expand. I did not expand my search for 3 years. If it wasn't in that criteria, it didn't exist to me. I just looked every day.
So then the next thing that's overrated or underrated, and this is one that I kind of enjoy talking to people about because it confuses them, but the financial independence, retire early movement.
Oh,
financial freedom. Yeah. Is it overrated or underrated?
I'm going to say it's overrated. And I want to have you give me a chance to explain, because I think it is a great story. It's a great goal. but for most people, it's a step too far. It's one of those things that looks good. You could say you're doing it and actually make no progress because you can trick yourself. It's years or decades in the making. That's actually why I generally don't get up and talk about all the units I own, because when you talk about huge numbers, people go, good for you, I can't get there. Well, in that case, I failed. So that's why I spend all my time talking about 4. So with the concept of financial independence, retire early, what I say is, you know what? Why don't we just talk about having a better financial future first? Let's lower some expenses. Let's get you to 1, 2, 3, maybe 4 rentals. And if you like that, then and only then we could start talking about financial freedom, financial independence, retire early. I think it is very important, but I've seen so many people take big goals like getting a 6-pack, which usually means you got to work out a lot, you got to eat better. And it's like, oh, well, not today.
But not today.
Oh, no, I'm not. I'll have cookies and cake today. I'll do it tomorrow. That's how I feel about the FIRE movement. So I want everybody to have a better financial future. And if we make that goal first, I think we help more people because it's more attainable. It's closer. You can take action and see movement today. And then if you get there, then we can talk about financial independence, retire early. So that's kind of how I break it down.
That's funny. I don't think I've heard anybody in this community say pretty much what I think.
Oh,
The barrier to getting started is usually putting the goalpost so far down you can't see it. And people think
exactly.
financial freedom and that retire early is all that matters instead of one cash flowing asset. Let me focus on that, get that done. And it wasn't really, I need to be financially free so I can retire early. I could have done that a few years ago. So it wasn't even a goal. But
Mhm.
having, and some people call it FU money, where if you
Yeah.
get fired, the company closes, or you just decide to walk away, you're not financially devastated. You can't get to that point without the small steps along the way. If you go in there and you talk about any incremental step, you pretty much get pounced on because you're supposed to be focusing on absolutely no debt and absolutely maxing out your retirement accounts. And you know, everything is these big, huge steps instead of, can you contribute the match at least?
Yeah.
And what is the,
Exactly.
how do you work on a little bit of savings and how do you get your credit score a little higher? And all those steps that I hit $1 million in net worth and $1 million in debt in the same transaction, but didn't
Nice.
know it until a year later when I thought, oh, I should do a YouTube video on this and see when I hit $1 million net worth, because I wasn't focusing on the big goals because those become too big to get to.
Yeah, that I like that concept, right? The goalpost is too far. And again, you got to remember the world we live in. People like a story. The story of the FIRE movement is you go and tell your friends at dinner, I'm doing FIRE. And then you go and buy a $200 bottle of wine and, don't do anything. No, I actually want to move people to a better financial future. We can take steps every year to just be a little bit better. And dude, when I see people do it, it's an amazing feeling. And yes, some of them will ultimately have the financial independence. But dude, I will feel great for the 10% that make it, but I'm going to feel awesome for the 90% that were just better. That's a hell of a thing to accomplish.
I completely agree. I'm doing it on a microscopic scale, taking phone calls and answering emails and trying to help people just figure out, what is the goal and where are you at now? So what are the next steps? And just those next steps are, to me, the huge accomplishments, which
Oh,
makes it.
it's amazing. And I promise you will, the same thing that happened to me is going to happen to you. You're a giver. You're using real life. You can probably respond to everybody today. I'm going to give you 6 months and you're going to have to find another way because it comes crashing down. But it's a good problem to have.
It really, I mean, that kind of started probably 3 or 4 months ago when taking the phone calls got to be too much, and then taking the emails. And I love to answer, and I try to get to every single one. And usually it's the person says, I'm sorry to bother you, but can you answer this? And I'm like so excited because I got somebody who will listen to me talk about this stuff. So it's still a good thing.
Yeah,
But
yeah,
that was kind of why I started the YouTube videos,
exactly.
is the same question. What is house hacking? What is a savings rate? What is financial freedom? Why small multifamily? How is that even a thing? And so I could say, watch this 10-minute video, and then we can have a 10-minute phone call instead of an hour-long phone call. And it's really helping.
Awesome.
In this community, when we're talking to somebody, it's very easy to say, I mean, I've shared it several times. This is my actual cash flow every year. This was my cash flow when I had 7 units. But in our personal lives, when you're talking to friends and family, do you think it's overrated to talk about money or underrated to talk about money? Is it taboo? Is it, especially in
Yeah,
your position?
I think it is vastly underrated. when I go back and think about my childhood and then raising a daughter who's almost 30 now, I could tell you, talking about money, when I say money, I mean income, expenses, savings, investments. It doesn't happen enough because it's not taught in school. And again, I have an advanced degree from a great university, right? An MBA, for goodness sakes, accounting and, all of that stuff. It's not really talked about. It's hidden. It's to be not discussed. That's unfortunate. I think families need to talk about money more. And the best example I have of that is when I try to put it in context of time, right? When you go to a store, let's say you're going to go buy I don't know what the latest is, a PS5 or whatever it is, a $500 video game or $1,000 phone or whatever it is for you. When you go there and you look at the price tag, I wish mom and dad would have the following conversation. Mary, Bob, Susie, whatever your name is, you're looking at that as a $500 widget. Did you know, given our currently fixed expenses and what we have left over, that means mom and dad have to work 127 hours to have the disposable income to buy that? Do you want mom and dad to have to work 127 hours to buy that thing? Because we already pay rent, we already feed you, we already have a car, we already have insurance. We ain't got much left. But you know what? If that's really what you want for Christmas, we will work 3 weeks and 7 hours to get you it. It's about time, folks. That $500 thing means very little to my family now, but it means everything 20 years ago. It's about the disposable income, the freedom number, whatever you want to call it. I wish people would stop talking price tag and starting time. My magic, if I ever get to the point where I could afford building a $50,000 app, is I would build a free app that takes the price tag and converts it to hours for mom and dad. Okay, you want that $25 pair of shoes or $100 pair of jeans? Means we got to work, 17 hours. How bad do you want it? Yeah, we don't talk about money nearly enough. It's unfortunate.
That's a point that I have to agree with you on. And I'm learning this in the last few months. It's a subject people don't talk about. Either they think someone is making too much or they're spending their money in a way that they wouldn't, so they're judging them, or they don't want to be judged themselves. But I start kind of getting known in my circle of friends, whether they think it's a waste of my time or not, because I'm not monetizing this and I'm just trying to figure out how to help people. Friends and family have come to me under the radar. Like they don't want other people to know that they're looking for help. And we'll ask questions on, well, how do you save? What does pay yourself first mean? That sounds so ridiculous when a person hasn't had the concept laid out. An example would be my son. He had gone to college. He was running a division at PayPal, got into a lot of debt. He would sit in other rooms and listen to me take phone calls with somebody about their financial journey. And I didn't realize he was kind of taking mental notes. And then when I started making YouTube channels or videos, he would come and talk to me about a concept which we would have never brought up before. So awesome. My failure as a parent and a family member, not talking about something that I might not have known it 10 years ago, so I couldn't have talked about it, but people in our circles just don't talk about it enough. And when you put on Facebook, I buy small multifamily, and somebody says, oh, I know somebody who's trying to sell theirs. It's not on the market yet. It's not on the listing. That would never happen if you weren't talking about it, which brings me to this. How important do you think a network is? The people that you know, the people you interact with, is that overrated or underrated?
Again, it's underrated.
We're going to disagree. I think we're going to disagree,
cool.
But go ahead.
Awesome. I think it's underrated. And again, I have a couple of experiences with this. The first 5 or 6 years of this, I was traveling. I didn't worry about the network. I thought the answer lived in Excel. And, again, when you're buying out of the MLS, maybe you don't really need a network. But as your experience grows, you get more units, you start buying rougher stuff or you buy apartments, right? A network can matter. Where I really seen the network come into play is the last couple of years when there's been no inventory. So I look at my network in one of two ways. First off, what am I giving and what am I getting back? What did I get back from my years of track record of being a performer is I was brought somewhere between 5 and 8 deals the last 18 months, probably $750,000 in equity once we kind of net it all out. Not because I'm a good guy, but it's because of this, is I told everybody forever, this is what I buy. People know what Mike Zuber wants to buy. So if they ever run across that and they want to double dip a commission, they call me. So that's how I got 5 or 6 deals this year. And then as you're trying to grow and help and get into new lanes, right? YouTube or doing courses or books, having go to other people that have done that and help is interesting. But again, I think you can do a lot by yourself just starting out. It just helps. It helps push you. It helps double check some things. But I think it's underrated.
Okay. So great. I was hoping that there would be a couple of these today that we had different opinions on. A lot of people think it's underrated because they think you have to know somebody, you have to have that. David Green's Investing in Long Distance has his core four that they think you need to have.
Sure.
And while I love the real estate agent that I've done my last 3 deals with, he's amazing. He's never made any mistakes. He's prompt. He's helped me learn. I like the lender. I've used the same one for the last 3 mortgages, but every time I get an offer accepted, I will take his offer in writing to 2 other lenders, let them see what's being offered so they have a chance to give me a better offer, which I then show to the original one so that they can beat it if they want to. And so I think it's kind of overrated that you need a network to a point.
Yeah.
If you're trying to scale like you did with doing a book and getting YouTube videos, I mean, I'm networking right now with you taking your time to talk to me and to everybody listening. And so I really appreciate that. But to invest and reach financial freedom, a lot of it is done on your own. And even my first real estate agent, who is a 20-year friend of mine, who is financially free with rental properties, gave me some pretty bad advice. He's retired, and we were looking at properties, and he buys, he was running a Windermere office. So he has the best deals walk through the door, and he's cherry picked over 20 years and has a great portfolio. I'm looking at duplexes and fourplexes and triplexes, which he's never purchased and didn't understand the math on. And he said, that one sounds great, make an offer. So I made an offer on 3 or 4. And then when I finally got my first property and saw the return and understood it, I looked at those first 3 offers and I thought, man, I'm so glad that didn't happen. Because they would have been either an alligator or a stale thing for the next 2 or 3 years. And so while your network is important, don't rely on other people to do something that you can do yourself, but then grow your network, because I'm hoping to kind of follow in your shoes and help as many people as possible, which in some way is a network.
I like it. No, I think I like your point of view. I like that.
Okay. Starting out in real estate, and we've got just a couple left because I know we've taken up a lot of your time. Do you think it's overrated or underrated that people think you need to have money to get started?
Oh, I think it's overrated. Having money getting started certainly is helpful, but I've seen more people hurt themselves because they don't do the work. If you have $40,000 like we looked at one house in Fresno and wrote an offer. Now, granted, it worked out. Some of that's luck, some of that's timing. Part of me wishes I would have spent the first year, because I'd spent a year looking in the Bay Area like every Sunday, but then we go to Fresno. At this point, Olivia's pissed off because now this is the 53rd Sunday we've gone to look at real estate. We haven't done dick, right? She's like, if you don't buy that house, I'm never coming back. I'm like, guess I'm writing an offer. That's pretty
Good
easy.
motivation.
Yeah, no, okay. But again, I think people use it as a crutch, especially today. Money is not the problem. Especially money is everywhere. And I don't mean that to sound arrogant. You could raise money on YouTube, BiggerPockets, whatever you want. If you could prove to people what a good deal is, money shows up. That may not have been the case in 2010 because there was a lot of scared money. But today, 2021, there's lots of money out there. There is so much money out there. You have to prove that there's a good deal, right? You have to prove your knowledge. You have to prove your worth. So I tell people all the time, I get these DMs all the time. How important it is. I don't have any money. How can I get started? Go do the work. Go document that you've looked at 1,000 homes. I can't do that. Well, then stop talking to me. I wrote 250 offers last year and I have a lot of stuff already. So do the freaking work. Stop being lazy. Stop creating excuses. Having a pile of money, it obviously means if you do the work, you're in a better spot. But most people with money don't want to do the work because they already have a crazy full-time job and a crazy family. People with money and down payment money sometimes are lazy. Like they'll take an average deal. Money's burning a hole in my pocket. If I don't use it, my husband will spend it. So I'll go do an average deal. You could look on the MLS any day and find an average deal. I teach good and great deals. It takes work. 99% of the stuff is average or bad. It takes work to find the 1%. And not a lot of people with money want to work.
And I'm really glad I asked this question. I'm glad this came up because you've actually kind of shifted my opinion. When you first started talking, I thought, okay, great, we get to disagree again because you think that it's overrated. I think it's underrated because so many people, Brandon Turner writes a book, How to Invest in Real Estate with Low and No Money Down, and it sells a bazillion copies. And a lot of YouTube channels are How to Invest with Low or No Money Down. But your strategy that you talked about was different, that there is so much money out there that you can use. But here was the thing that caught my attention. When I first thought of this question, my opinion was you need reserves. And the more money you save for down payment and closing costs and immediate repairs, the more options you're going to have. So I thought it's underrated that you need to do that. But I was not doing the work. And it's not like you all of a sudden get there and then you just go out in the market and find a good deal. You have to be looking for the deals when you don't have the money, so that it makes sense once you do, or you find the right deal and you don't have the money, the money shows up. People like me, if somebody walked up to me and said, hey, I've got a deal and I can prove here's a 30% return for both of us, I would find the money. So
yeah, right, exactly. No. Exactly right. Yeah, exactly right. Again, in the beginning, folks, you don't have any money. Do the freaking work. I mean, I can't tell you. What did I tell you? Number one was focus and then daily execution. If you can document that you've done the work and you found the Easter egg, even if you only get 25% of the deal, 25% is better than nothing. You get 3-4 of those, and then you have people you can point at going, hey, I made that guy 75% of this, or that gal. Dude, you'll have an open checkbook.
And the experience.
Exactly.
You're 25% of a deal instead of 100% of nothing, but that experience that you're going to get, right? And everything in real estate.
I looked at 100 or 1,000 or 400, and I found the 3 that made sense, and we bought them. See, I do the work. I only bought the top 3.
I mean, that's actually evident when you're talking to a lender. If you go to a lender and you say, I want to buy this rental property, they don't say, well, what will the return be? They say, show me rental income on your tax returns. Show me your debt to income ratio. Show me your financial reports. And when you can show a track record of having that success, a lender's more likely to work with you. Same thing with partners and yourself. When you learn that experience from that deal, that's something you're going to get to use in the next one. So you mentioned just a minute ago, you want to find great or better deals.
Good or
and
great.
So is it overrated or underrated that someone would accept an average deal?
So my one question is, do you know what an average deal is in your market? So I think it is underrated, because I think the world opens up once you can articulate average. I believe every market, every asset, every time has average. In my market today, it's 6%. 2010, it was 15%. So it does change. If you know average, and I only can do that because I look every day. And so once I know average, right? Again, I say it takes 60 days to know average. Then my job is only to write offers above 6%. Good is probably 7, maybe 7.5, and great is 9. In my market where average is 6, I only look between 7 and 9%. That's why it's hard. You got to go buy 2 bedrooms and convert them to 3s. You got to go find misdescribed this or that. You got to get off market. You got to get things that fell out of escrow before they go back on. You got to freaking work. But none of that matters until you can tell me succinctly, you know what average is. That takes hundreds of calculations in math, in searching, in daily work. That's why today's a great time to start. Do the work, document, learn. I think the world opens up once you know average.
Okay. I agree with you on this one. I think knowing the average is underrated, because if you don't know the average, you'll never recognize a good deal. Some people try to justify an average deal by thinking that in 5 years, I'll have rent increases and the mortgage will stay the same, so it will become a good deal. Even I've kind of fallen into that trap. But if I don't know what the average is, I don't know if I'm putting my money to its best use. Exactly. Because even if that does turn into a good deal, I might have missed a better deal from the start. And then the last thing for the over-under would be, do you think having your dream car is overrated or underrated? And sometimes being financially independent is not always about being frugal. Yes, that is the actual back of my truck. So I'm honest in my videos. But do you think it's overrated or underrated?
So that's funny. So I've had a dream car of mine since I was 20 years old, right? I was selling car stereos and alarms, and a dentist rolled in and he threw it's the only time I ever saw $10,000 in cash. Like, he threw down a brick of hundreds, like trick out my car. I'm like, dude, that guy's a baller. What kind of cars do you have? So we go outside. He's rolling in a brand new SL 500 at the time, right? 2-door, hard top, pretty. So that was my dream car ever since I was 20. And even then it was like 80 grand, right? This is like 1991 or 92 or something, right? And so that's been my dream car forever. And I could have financed it probably by the year 2000. So maybe I was 27 or 28. That's not who we were at the time, right? Because again, we started this real estate journey. I didn't want to increase my monthly expenses, all that stuff we've already talked about. But I can tell you, rolling into the Mercedes dealer and buying your dream car because you can is pretty awesome. And I still smile every day. I held on to that fire for 20 years, and now it's been 3 or 4 years. You know, the SL 550's in the garage, and it makes me happy every day.
Okay, so it sounds like we agree. I think it's underrated. A lot of people say you don't need a fancy car, you don't need a nice car. And when I had my younger kids living with me and I was making the $17 an hour, I couldn't afford a car payment. So I was one of those kind of people that usually had 3 or 4 cars because one of them had to run to get me to work.
Yeah.
So in 2017, got a brand new Corvette. In
Nice.
the end of 2018, traded it in for the pickup, the compensator. And when I get into the truck and it has the heated seats and the massage seats and the thick leather on everything,
Yeah.
it tells me that all the work to get to that point was not only important, but my strategy made it work to where that wasn't a negative. A lot of
Yeah.
people talk about the latte factor. Let me save $5 a day or $10 a day or not have the big car payment. And in the beginning, that stuff kind of matters. But the biggest impact I had to my savings, and you could probably guess what's coming up, is house hacking.
Yeah.
Eliminating that largest expense so that I don't budget. I have every streaming service. I am now starting to take a month in Thailand or Colombia every year. I have a nice car. The first couple of years, yes, you want to limit everything to get that momentum going. And house hacking was the biggest thing I could do, to where now when I talk about investing and making sure that you're not letting life creep out past your savings, yes, but it's on a sliding scale. At some point, you start to enjoy life. It's the people that refuse to put up with those first couple of years of being uncomfortable that never get to the point where they have the car you do or the truck I do.
Yeah, I believe you need to hold on to something, and for lots of us, it's a thing. For me, it was a car, right? For some people, maybe it's a trip or a vacation, whatever that thing to reward yourself with. Because I didn't reward myself with anything for 15 years, right? I kept my head down, kept buying the next deal, the next deal, the next deal. Wife retires, I'm still like head down, head down. It's an amazing feeling. I can still close my eyes and be at the table signing the paperwork. I smile when I go into the garage. It's you got to have it, something to hold on to, but only do it when it makes sense. It means nothing. It didn't hurt us financially in iota to do
right.
that.
Once it makes sense, it makes sense. Before then, it can delay or stop your progress completely.
Yeah, momentum's a big deal. I'm glad you brought that up. I could have got that car a decade ago, but it would have killed my momentum. In real estate investing, the FIRE movement, whatever you're doing, momentum is to be respected. And if you stop it early, like by buying a $100,000 car before you're ready and sign up for a $2,200 payment with $800 on insurance, you're going to start from zero again. That's not good.
And I'll probably butcher this because while I like Rich Dad, Poor Dad, like you pointed out at the very beginning of today, it's concepts, not application. The idea is that you want assets to pay for liabilities. So if you buy the liability in the beginning of your journey, you're never going to get the asset. But if you get those cash flowing properties and you get that income snowball going on and you get to your 4 properties, because you nailed it. At 4 properties, I had 7 units and reached financial freedom. So I love what comes out of your book because it actually worked.
Yeah.
I'm like an example of it.
Yes.
But once I had the assets, get the car, get the truck, the assets are paying for it, sleep like a baby. And not the one that wakes up screaming every hour. I mean, the actual one that sleeps all through the night. So
Nicely
man,
done.
Mike, I cannot thank you enough for taking the time to come and talk, because the people that are watching me are going to learn so much from you. And I really recommend that they check out One Rental at a Time. You can see it right there behind Mike. The book is great. I'm looking forward to the next book and hoping that you do put that one together.
I'm trying.
Awesome. Someday I might pick your brain on how all that works.
You got it. No problem.
Anything you'd like to wrap up with?
No, I just thank you for the opportunity. I love giving back. I think you're doing amazing things. It's going to be fun to watch your journey. I'll come back anytime you want to talk about over-unders or whatever you like.
Okay. Well, to everybody watching, from Michael Zuber with One Rental at a Time, I hope you liked this video. If you liked it, if you think you got anything out of it, hit like, hit subscribe, share it with a friend. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.